Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, December 12th, 2013. We had a pretty decisive down day across the board. Not only were all of the major averages down, but the market internally was also very weak. We were minus almost 1,900 issues on the New York Stock Exchange and minus 1,350 on Nasdaq. So this is by all measures a very weak day. Let's move on and take a look at the technicals, and we're going to circle back and take a look at the pure price patterns first. And let's start with the ES futures. All right, and here are the ES futures. You can see that we're still boxed up in the same lateral trading range. Was definitely a decisive negative day. This is certainly the biggest down candle that we've had in a couple of weeks, but it really didn't do anything to break us out of this range. If we do break down out of this range and start to lose, this 1775 area, we're gonna quickly drop down to the 1750 area, where we're going to find some support from the active pattern right now. The active pattern right now is this rising wedge that we did break out of. So if we do lose this 1775 area, there's going to be some pretty good support just below that, which is going to be very important to the market. It's only about 2% lower than where we closed today, so it's really not without the realm of possibility for that to trade within the next couple of days. So definitely keep an eye on that area, and we'll talk about the counts and the individual levels in a moment on the ES. Here's a look at the Dow Industrials, the Dow 30 cash index. Looks a little bit more ominous than the S&P because we had this drive up, this almost retest of this the breakout level, and then this retry of the high that came up short. So essentially, what we're doing right now is we're actually starting to fall back down to the downside here. We can actually be in the midst of beginning a C wave to the downside. So here's your A wave to the downside, the B wave reflex back up to get up and retest the high, and the C wave. The C wave won't be actually in effect until we undercut this previous low at about 15,778 or so. If we do start to break that, we're going to have some pretty good support at the top of the pattern, and if we lose that, then the chart's actually going to turn pretty negative. Here's a look at the Nasdaq side, and again, the Nasdaq side just has a little different character to it. Broke out above the active pattern, came back and retested it, used that for support, and then pivoted higher. So this is really the first breakdown off of these higher levels on the NQ side. If we get back down, obviously, to this 3369, 3370 area, we're going to start interacting with the previous pattern, which is going to be key support. Probably going to happen, but that is definitely going to be a key area. So one day down does not make a trend, but you can actually make a case for seeing lower prices, which we'll do right now. All right, so here's a look at the NQ futures with levels and also the seeker. We did print our 13 exhaustion up here. You can see that we used the risk level here as resistance, and it actually repelled price and didn't let price get back up and above it. So this key level definitely came into play. We closed back down below the 10-period moving average, so the 8/8 level is definitely going to be in play here because we do have our 13 in place. We appear to be rolling down off of this key resistance level. A couple things to keep in mind. We did have a fairly sharp down day, so we may wind up with a bit of a measuring day tomorrow. That would be the more bullish scenario, where we just kind of hang out, maybe get up to the midpoint of yesterday's candle, but can't get above that, and kind of game the bottom of the day. That would be your classic measuring day. If we do follow through immediately to the downside and do have a negative day tomorrow, that would actually be a sign of real weakness for the market, and be a sign of momentum developing to the downside that actually could have some good velocity to it. But let's not put the cart before the horse just yet, and we'll take this one bar at a time. Here are the Dow futures. The Dow cash index got a 13 exhaustion in place, had our risk level here, that's the magenta line, came into play. They tried to push up above it, but never gave way on a closing basis. So this sell signal is still active, still in place. We did have this down day. If we do start to break to the downside, this 4/8 level and then the static trend line, that's going to come in at 15,585 or so, is going to be the next target to the downside on the Dow. Now here's the one that really need to watch because I think most people are watching the ES futures. The ES futures do have our 13 in place from a couple of days ago. They tried to wiggle it up here a little bit, but obviously today was a pretty decisive break. We didn't undercut this low. We essentially just matched the low close of this move. We are now certainly pretty decisively below the 10 EMA, and the 10 EMA does have a little bit of a downward slope to it. That would really be the first time we had a downward slope in this thing since mid-October. If we do break to the downside, this 4-ace level at 1750 is also going to line up with that pattern that we looked at earlier in the presentation. So that's definitely going to be a really, really big area. We've got the 4-ace level, we've got the rising 50-period moving average. So that's definitely going to be a very, very good trade to target if we start to roll to the downside. All right, so let's do the full complement of market internals here in kind of rapid fashion. Here's a look at the NDX divided by the S&P. We've gotten up to this key resistance area, have not been able to break through it, and are starting to roll back down. So this resistance area is still in place, and until we take this out, that's definitely not a good sign for the market. Here's a look at the relative performance chart of the S&P, which is red versus the NASDAQ. NASDAQ definitely was showing some good leadership, but it is definitely starting to falter now and start to roll to the downside. Keep in mind that unless we start to see some relative weakness in the NASDAQ side, that's still okay if they're both rolling down together. What you don't want to see is you don't want to see the NASDAQ become more relatively weak than the broad market for a sustained period. Here's the SOX versus the NDX. The SOX continues to really not be that impressive versus the overall NDX. This ratio should be rising if the SOX are performing well, and they're really just not. Overall, you can really just say that this has essentially been a downward bias here since June. A little bit of a bounce the last couple of days, but really nothing to move the needle on the longer term chart. You can see the virtual trend line if you just draw with your eye here. That is still in place here until that flips around. That's definitely negative for the overall NDX. Starting to see a little evidence of some risk being taken off here. The S&P TLT cross is starting to roll to the downside here. The TLTs were weak today, but not as weak as the S&P. So we're starting to see some weakness here. This previous low is going to be important because this high is higher than the previous high. If we take out this low on a closing basis, that's going to be a qualified lower high now on the chart, and we could start to see some rollover action. Hasn't happened yet, but definitely could be in the cards. Here's a look at the 10-day trend. Tells us that there's definitely gas in the tank here to roll to the downside before we get to that 1.35 oversold threshold. We did get in the area of the overbought threshold. Never really breached it on a really good basis and follow through. But we definitely did get down there and touch it a couple of times. This kind of leads me to believe that 1750 area should be pretty good support, rather than having this thing break down below and get down to this 0.8 area and get really, really overbought. We weren't that overbought when we were starting to form that little top that's in place right now. So that generally implies that we're going to have a gentler fall to the downside, at least for the near term. Here's a look at the multi-sector daily chart, and you can see all the major sectors were down, including the XAU. So there was really nowhere to hide today. Today was just kind of a smashing across the board. The XAU, the SOX, the BTK, and the BKX were all negative today. The only small positive was that while the XAU was negative, it did make a new low on the move. All right, so here's a look at the individual sectors ranked from best to worst. Morgan Stanley consumers were top gun, no surprise. Little flight to quality there, but aside from that, there was really no place to hide. The gold and silver index, the XAU, was actually the last laggard. BTK was very, very weak. Certainly one of the top performers on the year, so it's got some room to go. Little ground to give back, but everything was really pretty weak across the board. The transports were definitely weaker than the broad market, but the XAU and the oil services, the OSX, were not quite as weak, which is one small little point of possible positiveness out of all of this. Here's a look at the SOX index. We did close below the 10 EMA, not really close to any real major levels that really should influence trade the next couple of days. Obviously, if we get down towards this 50 5-period moving average, we're going to see some better support there. Broker dealers were actually a little bit stronger than the rest of the market, but they definitely could be tracing out what could be a double top. Unfortunately, we didn't get another count here to the upside. We didn't get bar 9 of the secret exhaustion run, but we definitely could be seeing some topping action here. And we had some pretty good extension here off the most recent pivot. The oil services index, OSX, broke to a new low, starting to lose the support of the static trend line here. Next real level that's going to come into play are these tails that came up in late September and October at about 268.5. If we lose that, then we're going to be talking about this 265 area for next support in the OSX. But this is definitely short-term and intermediate-term negative. Dow Transports had a pretty good candle to the downside. 13 exhaustion is still in place. Risk level has held so far. Starting to get some distance now below that 10 EMA. We're going to find some support here at the 50 if we get into that, and then if we break below that, then this 4/8 level is going to come into play. But this definitely is kind of a rough-looking chart with the current technicals in place. BTK got clobbered today by all stretches. We lost the 4/8 level, leaving all these buyers up here out of the money. We're going to have some decent support at the 50 DMA, so tomorrow, especially considering the extension here, barring any kind of news, we'll probably see a little bit of an arrest to the downside and then maybe game this 50. Remember, the 50 and the 200s like to be gamed. And finally, here's the XAU. Up day yesterday, down day today, so this thing still is unable to make any real progress. I wouldn't rule this out tomorrow as making some progress back to the upside, but certainly now that we have these up and down candles right next to each other, the king and queen here, we'll definitely use the previous high here, which is going to be really important. 86.5 is going to be a key breakout level whenever that gets crossed to the upside. All right, folks, ran a little bit long tonight, but just wanted to make sure that everybody was aware of the exhaustions that were in place on the seekers everywhere. So trade accordingly and be ready for more action on the short side. As always, thanks for listening. This has been Rich for Tradesight.